Ever sit in a class wondering when you'd use what you're learning? Today, we're taking a core business concept, costs, and making it click, just like a great TED Talk. Because understanding costs isn't just for Wall Street, it's a life skill. It's the secret map to making smarter choices with your money. To show you how, let's imagine a small shop, a neighborhood bakery. First up, variable costs. As the name suggests, they vary. The more you produce, the more they cost you in total. For Maria's bakery, think about her ingredients. To bake more cakes, she needs more ingredients, so her total ingredient cost goes up. But here's the key insight. While the total variable cost changes with activity, the cost per unit stays the same. Each cake always requires the same amount of flour and eggs, so the rule is simple. Variable costs change in total, but they are fixed per unit. Fixed costs are the opposite. They stay the same in total, no matter how many cakes Maria bakes. Her biggest one is rent. Whether she sells 1 cake or 1,000, the landlord wants the same amount. This is where the magic of volume comes in. If she sells 1,000 cakes, the rent cost is spread across all of them. This is called economies of scale. The more you produce, the lower your fixed cost per unit becomes. Sunk costs are money you've already spent, like for a bad movie you can't unwatch. In business, Maria bought a $5,000 cake machine, but customers prefer a simpler look. That's a sunk cost. The rule: ignore sunk costs when deciding the future. It's a fallacy to use it just because you paid for it. Next, opportunity cost. Not money spent, but the income you didn't get to make. Alright, let's get into the nitty-gritty of assigning costs. This is where it can get a little messy. But we have rules for that too. First, we have direct versus indirect costs. A direct cost is easy. You can physically point to it, and trace it back to a single product. It's directly linked. For Maria's cake, the flour, the eggs, the sugar, the chocolate frosting, direct labor, time the baker spends mixing and baking that one cake. If you're making a wooden chair, the wood is a direct cost. It's simple, it's clean, you can see the connection. Indirect costs are the sneaks. They are necessary for the whole operation to run, but you can't pin them down to one product. Think about the electricity bill, lights, refrigerator, credit card machine. It helps make every cake. But how much did one slice use? Who knows? So, electricity is an indirect cost. Now, shift to management perspective. This is about fairness, controllable versus non-controllable costs. Controllable costs, manager can influence. Manager decides, staff hours, local flyers and social ads, avoiding ingredient waste. They're in the driver's seat. Non-controllable costs. Samshunsatsu, manager can't change. Decided by others, higher-ups or outside parties. Monthly rent is non-controllable. Oven depreciation, corporate marketing fee, organizational chart, head office, rent, store manager. Staff hours. The golden rule. Judge managers only on costs they control. You don't blame the pilot for a bird strike. You evaluate them on their flying. So, let's bring it all together. We've been on a quick journey, but the map is pretty clear now, right? So, let's recap. We started by separating the costs that move with you from the ones that stay put. Variable costs, like ingredients, change in total as you make more, but the cost per cake stays the same. Fixed costs, like your rent, stay the same in total, but the cost per cake gets smaller the more you sell. This is the fundamental toolkit for understanding how your business breathes. Then, we looked at the ghosts in the machine. Sunk costs are money you've already spent. You have to have the discipline to ignore them when you make new decisions. And opportunity costs are the invisible price of the choice you didn't make, the potential income you gave up. Always ask what road you're not taking. Direct costs, like the frosting on a specific cake, are easy to trace. Indirect costs, like the electricity for the whole shop, are shared and need to be allocated carefully. We separated controllable costs, the things a manager can actually change, like staff schedules, from non-controllable costs, like the rent set by the landlord. This is the foundation of fair evaluation. You judge people on what they can control, not on the things they can't. It builds trust and makes for a healthier, more effective team. So, what now? You've got the ideas, but ideas are useless without action. Here is your one simple task for today. Don't just nod along. Do this. Take one thing you do, your job, your side hustle. This simple act of writing it down will take these abstract concepts and make them real and tangible. It's the first step to making smarter choices, to stopping the waste, and to finally gaining control of your financial world. In a chaotic world, a little control is beautiful.